Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now we've gone through the big holiday break, Thursday, Friday, really tied up together the US Thanksgiving. No major dramas with where all the instruments are, right? I'll come back to the charts, but what you're looking for on a Monday is, sort of big one-way moves that sort of stick out from a geopolitical event. We don't have those. That's a great sign. Okay. Now, if you just have a quick look through the various news from the general FX news, and the media is trying to beat this up as the US dollar set for the worst week since July. That's no big deal. It hasn't gone far at this point, but it is set up for a decent move, right? Central bank news, okay, a bit of an undecided Fed, big move towards lower potential or lower cuts rates in the US are sort of spurring on the moment. Now, looking at the follow the trail, the interest rate or the bonds, interest rates in the US, pretty static, right? So that's not really doing anything at the moment. Obviously, the holiday in the US is really diffused momentum. We've got US equity futures down a little bit, and we've got Euro, Sterling, Aussie, Kiwi up. So bit of a mismatch at the moment, but that's not unusual for a Monday, right? What we're really looking for are the good trading opportunities as we go through this week. Now, let's just give you some structure here around where I think a good way to sort of look at this. Now, if you really want to get a grasp of what's happening this week, just scroll down off on the Trade Hub to the weekly market insights and event report, right? We've got an OPEC meeting on Sunday. Now, these guys are just do whatever they want. But you need to know what the general idea of what they're doing is, because it has a big influence on the Canadian dollar in particular, right? Then you come down through the week, the potential Fed chair pick. Okay, Hassett. This is one of the wild things, right? It's only unique to the US where the president can come in and choose who's going to be running the Fed, right? And you've got this Hassett, right? He's a BlackRock guy, right? NEC director Hassett, yeah. So basically, you look at this and you're like, wow, like you could just put anyone in charge that is going to do the dirty work for you. Now, come down through RBNZ review, ECB minutes, Bank of Korea. We've got the ICB, US ISM manufacturing numbers. You got some data coming out, right? We've got some good things happening. And what I mean by that is if we just come over to the calendar, right, you scroll down through this, you look at the sort of key numbers, right? Monday, yeah, I don't think the Chinese manufacturing is that important. Swiss retail sales, probably worth a bit of a bo peep. US numbers are really in play this week, right? ISM manufacturing numbers, it starts with that. And if you come down through the week, looking for US numbers, we got the sort of the ADP employment change. We don't have non-farms. We do have the ISM services, or the non-manufacturing numbers, industrial production numbers there as well. Now, why am I focusing on the US numbers just to start with? Well, it comes down to the market, right? Market perception. Now, the market has factored in a 79%, a 25 basis point cut from the Fed. If we got stronger numbers, that's going to mess around with the percentages here, right? So you might see that unwind if we saw a string of US numbers. It has to be really strong, right? Or if they come out weak, that number's going to jack up towards 95% this week. So, but the big move would be really strong numbers. So as I was just saying to you there, you come back and have a look and you're like, well, okay, I've got US numbers here. That's when we can come in and I'll show you the technical setups for the majors at the moment. This is important because the market is 79% factored in a cut. If these numbers surprisingly were really good, we're going to see that unwind and the dollar sort of spike. If the numbers are weak, well, the market's already largely factored in a cut. Dollar's only going to go down a little bit, right? And that's where you connect the dots, connect these bigger numbers together. So if we look across the interest rate tracker here, what you want to be doing is looking at the central banks that are coming up reasonably soon. Obviously, the Fed, December 10, next week, the Bank of Canada. Then you've got December 9, you've got the RBA, 95% no change, right? The numbers have been coming in hot. There's nothing that's going to change that. So if we got stronger Aussie numbers, it's not going to go up further because it's already factored in. But weaker numbers, we would. But if you come back to the calendar, right, and have a look through it, there's not much coming out of Australia this week. We've got GDP numbers Wednesday. That's not going to be enough to rock the boat. So probably the Aussie in that regard isn't a big ticket. Bank of Canada, well, this could be good. Stronger GDP numbers on Friday. Saw the CAD, really long dollar market, and oil was falling. Now oil's rallying, and we got the strong CAD GDP. Saw a big clean out of long dollar CAD positions, right? But that could come into play. So you want to be having a look at that as well. We've got CAD employment numbers on Friday, right? You got to wait all week for that. Now you scroll down the bottom here on December 11, you got the Swiss National Bank. These guys don't do anything, right? Except mess up intervention, which they did in January 2015. So, but we do have a couple of Swiss numbers, right? And the Swiss numbers do come into play. If they're on hold, right, that means stronger numbers. That's what that means. So if we got weaker retail sales figures out of Switzerland, right? If I come back up to the start of the week, retail sales, manufacturing PMI numbers, then you might see a bit of a move, right? Think of Switzerland and New Zealand as the same. Really tiny economies, really only a few numbers that come out. They're sort of more impacted by external areas. Like Swiss, well, the Eurozone is a big mover of the Swissy, okay? So if we scroll down through the week, right, we've got some inflation numbers here out of the Eurozone. Now, German numbers, I have a preference for those, but that's what we've got on Tuesday. Don't worry about the Japanese consumer confidence, GDP growth. That could be interesting for the Aussie. As I said, the market's not going to do much if they're strong numbers. If they're outrageously weak, we could see a bit of a clean out to the downside. You come down into Wednesday, ISM services numbers. I don't know why industrial production doesn't get a bit of a rap, because it is an important number. Coming to Thursday, CAD Ivy PMI. This is a well-respected number in Canada that could have an impact as we lead into, if I just clear the screen, scroll down into the Canadian employment numbers, right? So that's something that we can look forward to. Then you've got the PCE price index, a bunch of US numbers at the end of the week, right? Try and piece those together with the ISM numbers earlier in the week. See if there's a shift in the expectations for an interest rate change from the Fed. That's where you're going to see things moving, right? So we've got an interesting week coming up, and I think we've got a more interesting week because check out the hourly charts here, right? This is the major currency pairs. Now, what I've done is I've really congested the time frame so you can sort of see where they've come from. Like, look at these moves here, 119 in euro, right? Middle of September, down to, was it about a 111, I think it was, in November, right? So it's come a long way. Now, the dollar, with the US government shut down, whether it was US dollar safe haven, there was no chance of the Fed changing rates. What a load of crap, right? So there's so much dollar strength in the market still that, to me, isn't real. Weaker ISM numbers should be the start for the clean out, right? And they're all set up. Like, if you look at euro, it's right at a level where you could be looking to get long a break trade, right? We've got good technicals here is what I'm saying. Sterling's already had a pretty good run, but we've got the latest trend line there. Same with Aussie. Kiwi's already left the building. And all the negative news is built into New Zealand. So this has got room to really bounce now if we got a really strong, a really weak dollar picture. The beast, right? The old-fashioned wedge formation starting to sort of break down. This is telling me that the dollar, I mean, the beast is a little bit harder, looks set. We've got a really good technical picture here for the dollar to have a good clean out to the downside. And if I did zoom in a little on a lot of these charts, you can get a better idea of the technical levels around that, right? You can see the euro just starting to pop up. I'd ideally like to see these things breaking during the European North American session. Would give me a bit more confidence, right? Because you can get a lot of false moves on Monday in the Asian session. But the dollar index, it looks like it's done. Dollar Swiss, okay, it's broken down, drifting sideways at the moment, ready for a move to the downside. The beast, well, it is, it does its own thing. This is a great time for the BOJ. If we get weaker US numbers, the Fed cut rates, it's a great time for the BOJ to intervene to get bang for their buck. They could really drive dollar yen or the yen down against the dollar, you know, 10 cents potentially, right? So there you go. We've got some levels. I really like the picture here of euro, even the Aussie. Like sterling and Kiwi have sort of left the building a bit, but that's where we are. So all you need to be doing is look at your charts and you can sort of see what's going on. And then you come back, have a quick look at the interest rate tracker, see who's really banked up, really backed themselves into a corner, right? Like, and that would be like a 95.5, like the Aussies on hold. If anything dramatically bad came out in Australia, that's got to be unwound and you get a huge move to the downside. That's what we're sort of looking for. These are the no-brainer trades that you can predict because you can see how the market's positioned around the changes of interest rates at the next central bank meetings. All right, so that's where we are. Don't forget to check the live signals, right? With these markets, with everything about to start trending, right? There's no need to capture the first move. We could have trending markets right through December. I think we're set up usually, say around a couple of days before Christmas. You get the markets closing down and a lot of a lot of lack of interest up until about the 5th of January. I think this year, December could be our best month because we've had the government shutdown. We've had all the crap tariffs all through the year. Now we've got natural flowing markets. The dollar's overdone. We start to see that unwind. Fed cut rates. Boom. The dollar falls. Everything starts to trend and we are in place. So get excited because the writing is on the wall and you can see it once again in the charts, right? And if you even look at the daily charts, you can start to see a lot of these instruments are positioned still to keep going up. Euro and against sterling is about to get back into an uptrend on the dailies. Aussie's already there. Kiwi's got a lot of work to get back into an uptrend. It's still pressure on the downside, but dollar CAD almost ready to break back down. The beast, well, it doesn't look like it wants to play at all. And with that euro going up, you've got to expect dollar Swiss to go down, and it's prime for that as well. And that's where we are. So really good technical setups. We've got a good mixture of economic numbers coming out this week, and it's spread across most time zones, right? Probably more European, North American. As I said, the Aussie GDP numbers, they are coming out on Wednesday, a little bit short of numbers for Australia and New Zealand, but plenty across the zones, right? And they're not all jammed up into one day, which makes it easier to isolate the best opportunities. Now, don't forget, I'll be running a risk assessment. Don't waste time assessing the wrong things, right? I've been speaking to a few traders about they're looking at all the markets. They're looking at this, looking at that. Like, there's no need to look at everything. Find the best trades, and you can use the live signals for that, which ones are in the zone. Assess those, and then look to put the trades into play. That's what you want to be doing. Don't spend time assessing everything, right? I'll take you through that 6 p.m. on Sydney Wednesday, London 7 a.m. A little bit of a tough one for the New Yorkers, 2 a.m. Maybe some of the guys on the West Coast, if they're up late, can get hold of that one. But don't forget, those sessions, they do get recorded and you can come back and view those sessions later on. So that's Wednesday across the board, Tuesday in North America. Just keep an eye on the signals, interest rate tracker. You've got your charts, get your technical levels done for Mondays. It all looks pretty good to me. It's just a matter of waiting for the markets to connect. It's still early in Asia on Monday, so you know what? Let's just see how it plays out from here. I'm expecting a big down move on the dollar, and that's going to give us the cash that we're looking for. All right, guys, have a good one. All the best. Cheerio.